Dear Latvian businesses, dear members of the Latvian Chamber of Commerce and Industry, dear colleagues from the International Financial Corporation and Multilateral Investment Guarantee Agency, it's a great honor from my perspective to welcome you all here to the House of Latvian Chamber of Commerce and Industry. Although most of you are joining us here today online, it's still a great pleasure to welcome you all here. My name is Jānis Lielpēteris. I'm a board member and the policy director here at the Latvian Chamber. And today we are meeting with one really specific target. We are trying to understand how the International Finance Corporation and also Multilateral Investment Guarantee Agency can help boost Latvian businesses in different export markets. We have pretty tight agenda today, so I think without any further ado, I will just give an opportunity for a playback of the speech of the President of the Latvian Chamber of Commerce and Industry, Mr. Aigars Rostovskis.
Dear organizers, dear entrepreneurs, welcome to Latvian Chamber of Commerce House. Latvian Chamber of Commerce is the largest business organization in Latvia. For me, it's a great pleasure to say some opening words for this today event, which organized by International Finance Corporation, Multilateral Investment Guarantee Agency, and Finance Ministry of Republic of Latvia and Chamber of Commerce. For us, for our business organization, it's very important export markets, and we have many members who are working in export markets, and as well companies who are preparing ourselves for export. And for us, this new opportunity for new finance instruments are very important. It's my very deep hope then after today's event, our members will find some new instruments how to develop this business activities. And I wish successful day and find the new solutions for our future cooperation. Thank you and good luck for today's event.
Thank you very much to Mr. Aigars Rostovskis. And since all of the technical issues took about 3.5 minutes from the speech time, so I guess it was a good point that the speech was shorter than 5 minutes. As Aigars already mentioned in his speech, the Latvian Chamber, one of the most important parts of the Chamber work here in Latvia is to promote export activities of our members. But just to give a let's say much more wider, but still a rather short one, introduction to what Chamber is doing here in Latvia. There is a presentation upcoming from my side, so please, can we put that? It is already on screen. So yes, what about the Chamber? And I think that this will be more interesting for our international cooperation partners rather than Latvian Chamber members, but still, I think it's really important that we are on the same page regarding what we are doing here at the Latvian Chamber House. And so there are, regarding the line of action of the Latvian Chamber, there are 3 main points. And the first one is improving the business environment here in Latvia. And this in most cases is more connected to the different kind of interest representation and lobbying activities of Latvian businesses. I will touch upon later on different perspectives we are working with let's say different policy members, but we will touch upon that later. At the same time, we are working with increasing competitiveness of the Latvian Chamber members, and this is more connected to the different kind of educational activities of the Latvian businesses. And I would say that this event as well is one about the increasing competitiveness of the Latvian businesses in different markets. And of course, we are working with the export promotion. And as said before, that as you might know, the Latvian interior market is rather small, and therefore for companies to scale up and bring extra income to the state budget, the export is really important. And at the same time, we are trying to work with the different kind of companies from different markets all across the world to find the best scalability potential here, also in a rather small Latvian market. If we look at the members profile, we have approximately 6,000 members, and 3,000 of them are individual companies, which are direct members of the Latvian Chamber, and around 3,000 companies are members from different associations and regional business organizations. So namely from some industry associations, all kinds of regional business clubs, and smaller units of businesses. If we look at the company profile based on sectors and based on size, we see that most of the companies here at the Latvian Chamber are smaller or micro sized. So namely companies even starting from 1 employee, but we also have a rather large part of the companies which are large in size, even up to 500 and up employees. And if we look at the sectors, then most of the chamber members are working in the services sector, but still we can see a lot of companies working also in trade and industry. If we look at the regional coverage of Latvia, as it might be known that Latvia is geographically really central state, and so namely most of the economic activity is based here in Riga, and and Riga is also the main economic center of Latvia. But at the same time, business is really active in all regions across the Latvia, and also so we are having affiliates in all regions of Latvia, including Kurzeme, Vidzeme, Latgale, and Zemgale. We are also representing Latvian business interests on the international area, and so our first general partner of cooperation or the format of interest representation is Eurochambers, which is the Association of European Chambers of Commerce and Industry. We are working closely on a daily basis with Latvian members of European Parliament. We are having numerous cooperation agreements with different partners across the world, and these are in 2 directions. Some of them are closer related to the cooperation with our representatives all across the globe, and on the second end, these are different cooperation agreements with chambers also all across the world, not only in Europe. And last but not least, we're also a member of the International Chamber of Commerce, trying to not only to understand business issues here in Latvia or on a national level, but also internationally. Services and activities. Just to give a brief introduction on what are the services Latvian Chamber members can receive while being members here in the Latvian Chamber. First of all, regarding advertising services, of course, this is a great opportunity for Latvian businesses to work in a B2B sector, so namely finding a partner from other companies, and we have different kind of activities starting from member to member discount program. Also an opportunity for members to give partner seminars to other chamber members. Of course, there are also different kind of activities regarding email advertising and different advertising services. But I think one of the most interesting activities from the chamber's perspective is the social campaign, the Good of Latvia, or Latvijas labums in Latvian. And this is a small trademark we created already almost 10 years ago. And this can be used by the chamber members who are selling their goods all across the globe, but also here in Latvia. So namely a consumer who enters a shop, for example, can see that this thing is made here in Latvia. And also we are having a weekly broadcast on the one of the largest commercial televisions here in the Latvia. It's also called the same name, Latvijas labums. And we are also giving an opportunity for Latvian companies to give some goods to the attendees of the broadcast. So this is a good way for companies to boost their visibility. Business environment, this is one of the, let's say, this is the closest part to me personally, and business environment and all kinds of activities connected to the policy making is my main field of work here at the Latvian Chamber. And from the members' perspective, members has an opportunity to take action in different kinds of competency councils and committees. In total, we are having more than 20 of them regarding different industries, starting from manufacturing, working with the tax-related issues, working with, for example, food production, manufacturing, and all kinds of different formats where members can discuss different kind of policy issues, boost their own agenda, and try to find the right way to improve the Latvian business environment. Regarding competitiveness of the members, we are having more than 200 free training seminars each year. In total, regarding all kinds of different activities, which are not only training seminars, we are having around 250 of them. During the last year, there was in total 2,000 participants in these events. And although some of the events are happening exclusively here on the spot, most of them after the COVID crisis are happening online. And we see the tendency that actually the video recordings is a really good way for the businesses to work with the different kind of education materials. And I think that we see that in many cases, CEOs of the company during the day, they are not able to attend the events here on the spot. So they are watching the video recordings in the evening. So this is actually a great boost from the COVID side, let's say so, which gives an opportunity to work with the different kind of education materials post factum. And last but not least, the export direction. And in this slide, you can see what are the main support activities for foreign companies which are trying to enter the Latvian market. And I think more important, our support to Latvian entrepreneurs who are trying to find the right market for their product scalability or trying to find new partners abroad. And this is closely connected with different kind of individual projects we are working on. We are also creating different kind of B2B meetings, and these are just a couple of markets we've been working with in the past year or so. Of course, it is not a secret that direction of the cooperation with Ukraine has taken a new turn after the 24th of February. But we see that there will be a lot of job needed to be done, and this has been also one of the most important directions of our work this year. Actually, trying to give Ukrainian companies possibility to continue their work, not due to the war, what is happening there in Ukraine. And this is also one of the, let's say, visually most representative activities of Latvian Chamber of Commerce regarding export. And this is export catalog, which is made once in every quarter of the year. And in these export catalogs, we are listing up companies and different kind of special offers to possible partners all across the globe. And of course, I think this is very important for our export companies which are trying to enter different export markets. And this is in cooperation with our partner NordSage, we are trying to help companies do the background check on different kind of partners on foreign markets. And we see that actually in some cases, the cooperation agreements with the possible partner didn't happen because of this background check. And actually, from one perspective, it seems like this could just slow down the activity of possible cooperation with the export partners. But at the same time, we see that in many cases, the risks are much higher than the possible gain from one specific deal. So this is very important regarding all kinds of anti-money laundering possible problems, and also regarding financing of terrorism. So yeah, in a brief way, this is it from my perspective. I hope that this small introduction just gave a bit more broader view on what the Latvian Chamber is doing here in Latvia and how we try to help Latvian Chamber members. But right now, I would like to give a floor for the keynote speech to Ms. Beatrice Meser, Special Representative from the Western Europe of the International Finance Corporation.
Well, thank you very much for this really warm introduction and the welcome here in Riga to everybody. Good morning, everybody on the screen, distinguished guests, ladies and gentlemen. My name is Beatrice Meser, and as Yanis already said, I'm the special representative for Western Europe of the International Finance Corporation. Together with my colleagues from Miga and the IFC, we are delighted to be in Riga today for this workshop, which aims to showcase opportunities for Latvian companies in emerging markets. Today's event is co-organized in partnership with the Ministry of Finance of Latvia, as well as with the Latvian Chamber of Commerce. And I really would like to thank everybody for their instrumental role in preparing for our first in-person event in the country since 2019. Today's event will focus on identifying investment opportunities in emerging markets, in particular in the digital space. We believe that these type of conversations are very timely given the current context. The COVID-19 pandemic and the current geopolitical context have reinforced the value of market diversification and innovation, as well as the importance of working in partnership. During the workshop, we will also hear from my colleague Jan Burtin from the Multilateral Investment Guarantee Agency, or in short, Miga. Miga is one of the World Bank's group sisters organization that provides political risk insurance for projects in emerging markets. But before I give the floor to my colleagues, I would like to take a moment to give you a brief overview of IFC and our strategy. IFC is a member of the World Bank Group and as such focused on advancing economic development and economic growth of the private sector in emerging markets and developing economies. So how do we do this? We actually invest in these countries. We invest our own money from our own balance sheet. We mobilize financing and expertise from other investors, and we share our global expertise on private sector development. So by doing so, we create jobs and raise the living standards, especially for the poor and vulnerable in the emerging markets. To give you an idea how about our investments, in financial year 2022, IFC committed a record $33 billion US, including close to 13 billion for our own account. So 13 billion we put on our own balance sheet, the rest we mobilized other investors. And our investment portfolio amounts to about 64 billion US dollars invested in more than 70 countries. IFC's strategy has two main pillars. The first one is to unlock investment opportunities in these difficult markets. And one of the biggest obstacles has been the lack of bankable projects where there is enough business promise to attract international investors' appetite to invest in these markets. To help address this issue, IFC is proactively engaging with companies and countries to create the conditions for investments in developing countries. And the second pillar, as I already said, is mobilizing private capital for development. We are creating platforms for funding where other investors can join us, and we broaden the pool of institutions that can co-invest with us, again, with the goal of mobilizing $2 for every one that we invest ourselves. Now, we invest in emerging markets. So our mandate in Western Europe and the Baltic countries is twofold. A, to manage the relationship with European stakeholders, including our European shareholders, such as the Ministry of Finance of Latvia. And B, by identifying business opportunities with European clients and companies that are interested in investing in emerging markets. Western Europe also plays a critical role in supporting IFC's creating market strategy by working with such partners as development finance institutions, commercial banks, asset managers, and the private sector. IFC has committed about 2.6 billion to projects where the sponsors came from Western Europe. Investments included 60 projects in areas such as access to finance or supporting the financial sector, banks in emerging markets, infrastructure projects, manufacturing, and agribusiness. Now, we have dedicated country managers that cover every single country in the emerging markets, but also in Western Europe, and also industry leads. And my colleague Lucia Mitariu, here in the front row, is the country officer for the Baltics, and she will speak shortly about our strategy to engage with the private sector companies in Latvia. In the medium term, IFC's priority areas will focus on responding to the accelerated climate crisis, relief and recovery efforts also in the European space, supporting the digital transformation, and building healthcare resilience and access to vaccines. And we see very strong synergies between these priority areas and the business focus and expertise of Latvian companies. For example, when it comes to supporting the reconstruction efforts in Ukraine and helping alleviate the ongoing humanitarian crisis in the country. Supporting the private sector is vital to keep essential goods flowing and protect the country's long-term productive capacity. So the private sector will also play a critical role in rebuilding Ukraine. The second one is providing innovative solutions to climate change, another global challenge, and healthcare problems arising in the aftermath of the pandemic. And oftentimes this is done through the use of technology. So we see a lot of potential for investments in the tech and fintech sectors in emerging markets. For this, IFC has a dedicated team to investments in disruptive technology and funds, as we call it, which look at highly innovative tech companies where solutions can be easily scaled and transferred to emerging markets. Latvian companies have deep expertise and a competitive advantage in the tech and fintech sectors, and we are eager to explore potential investment partnerships with them in this space. Now, we don't yet have a very good Latvian example, but we have an example with collaboration with a Baltic company that you all well know because I saw it today also out on the street. And it's Bolt, the mobility platform, which is an Estonian company, as you know, and IFC partnered with them, helping them expand in emerging markets. So when we arrived here in the Baltics a few days ago and we saw Bolt, we were very excited. And of course, to move around, we only have used the Bolt cabs, not yet the little scooters, but the cabs. So this is a very good example. And if you have companies like Bolt that would like to partner with us to go to emerging markets and bring those solutions into the emerging markets, I think you have a very good partner with IFC and Miga. So happy if you approach us. So with that, I'm looking forward to fruitful discussions today. I know that we have a lot of people on the screen. So please also approach us via email if you have questions to explore possibilities of cooperation. I will hand now over the floor to my colleague Lucia, as I said, the country manager for the Baltics, who will do a presentation, and then to Jan from Miga, so you will have a better idea what our product offering is. And I hope that we are going to have a good start together in many partnerships, bringing your technology to developing countries. Thank you very much.
Thank you very much, Ms. Messer. Yeah, I really like the remarks regarding you using Bolt taxis here in Riga. I think that in also from the national perspective, I think this is the most popular cab here in Riga as well. And actually, if you try scooters, just be careful. There are a lot of accidents happening with those ones. So yeah, as Beatrice already said, the next presentation will come from Lucia. It will be an overview of the IFC and its activities, and we will just prepare the presentation. I think that this one is the correct one. So please. Good night, Daria. Use the clicker, which is like this.
Okay. So, hello everyone. Very pleased to be here in Latvia today, and thank you for coming or joining us online. I'm going to give you a brief introduction into what IFC does, some of our products and services, and hopefully you will find this useful. We are available for any questions that you may have at the end of the presentation or later on. So let's get started. This is the agenda for today's presentation. We're going to talk a bit in general about IFC and then try to zoom in into disruptive technologies and venture funds team and what they do and how we can support companies here. And then we're going to finally wrap it up by looking at how we can provide value added for our Latvian clients. So just a short introduction into the World Bank Group. So when we say World Bank, we actually mean 5 different institutions. The first two, IBRD and IDA, they're exclusively focused on working with the public sector, so with the governments who are our clients. We provide them with technical assistance, loans, and policy advice. IDA does the same, but for the governments of the poorest countries in the world. These are interest-free loans, and basically every year we have a list of IDA eligible countries, which gets updated, and then countries qualify for these type of lending. And then in the private space, we have IFC and Miga. You will hear more about Miga from my colleague Jan, but we were created in 1956, and our goal is really to work with private companies in member countries, helping them expand their activities into emerging markets. So, as I mentioned, we're the largest global development institution. We really pride ourselves of being present in over 100 countries. And where we're not present, we have colleagues from our bank who are on the ground, and they can always support our engagement in a certain country. We have around 4,000 staff. This is quite a lot, but they are more and more decentralized to the region. So we have a lot of staff that are based on the ground. And yes, we're consistently AAA rated. And yes, and to say that our shareholding is, so we're owned by the 185 member countries. Sorry, what happened? Okay, I don't know what. This is just a brief overview, some figures that Beatrice already mentioned. So FY22 was a record year for IFC. We have committed a total of 32.8 billion. So you can see a bit the breakdown. Beatrice hinted at this. We've done 12.6 billion from our own account. We've also managed to mobilize 10.6 billion. And this is an area where we really want to focus going forward on mobilization. The rest of the financing is really short-term finance, so around 9.7 billion. And you can see how many projects we've done, are almost 300 projects in 71 countries. So we really spread around the globe. This, I think, will be an interesting slide for you in particular. So I'm going to spend a bit of time talking about the 4 main buckets of activity for IFC. The bread and butter is really the investments. And here you can see that we offer a huge variety of instruments. But what I wanted to point out is that we can tailor really to the client's needs. So, we don't have really set, we can also do very set things, but in general, we try to have a conversation with the client and understand what his financing needs are, and then really tailor our instruments. So we can do loans. It can be either at the level of the corporate financing or at the level of the subsidiary. Depending on the type of project, whether it's a greenfield or a brownfield investment, we have different percentages of how much we can invest, ranging from 25% for greenfield in general to about 50% if it's a brownfield investment. We can also do equity. This is very common in the space of tech companies, for example. We do trade finance, as mentioned before. We can also do derivatives and structured finance, so such as risk sharing facilities or guarantees. We can also do blended finance. This, we actually had questions on this yesterday. This is to be used in very specific cases for very specific projects. So, for example, if a company is thinking of going to a country that is, fragile or has there's conflicts there, we can provide a sliver of concessional finance to soften the conditions of the loan and make the project happen. So this is in a nutshell what we offer on the investment side. Upstream, this is a new initiative. It's not new to IFC. We've done it before. Now we're doing it in a more structured way. We have 300 new staff that's really focused on opening markets and sectors. So we do this in partnership with our colleagues at the bank, where we engage with the government on ensuring that that we have country-specific interventions to allow private sector participants to enter a certain sector. We also do that at the level of the project. So we talk with a company early on, in general, 3 to 5 years before they're ready to receive an investment. And we help them, for example, with their ENS standards, with their corporate governance. There are certain things that they want to improve. So we work with them long term to make sure that they're ready. We have advisory solutions. These are in-house experts that are really located in the industry departments. These are engineers or specialists in their own fields, and they work with client companies to help them with their performance standards, for example, with their corporate governance. As I mentioned, we also offer PPP advice. So we have a special team that is looking at that. So different types of advisory. And finally, I'd like to mention mobilization, because this is a very important and increasing area of focus for IFC. So we have the oldest syndication program amongst the MDBs. We have over 80 co-financiers. So these are partner banks or funds or DFIs. We also can bring in other partner MDBs, for example, if the project is very large. So we can also do equity mobilization. And here you see again the industry, but I don't know what happened to the logos. But I'll just go more into depth on the industries. But as Beatrice mentioned, so we can do financial institutions. So this is all bank and non-bank financial institutions. We can look at infrastructure. Typically large projects. We can look at manufacturing, agribusiness, and services. And this includes things like forestries, for example, which I know that there's also some Latvian companies that are active in this sector. And finally, the disruptive technologies and funds, which was already mentioned. So in terms of strategy, I just wanted to put this slide up. I mean, it's, again, as I mentioned, we work in all the sectors, but we try to focus more on infrastructure, agribusiness, and on financial inclusion, health, and education. In terms of the challenges, I mean, I think these are challenges that we can all identify. It's climate finance, fragility, even more so now in the context of what's happening in Ukraine, and then in digital economy, which is also very important and was highlighted by the COVID-19 crisis. And in terms of regions, Africa is a big focus for us. So you may have seen that in the past previous seminars we've done here in Latvia, we're focused on select countries in Africa where we think there's a lot of potential. We're also focusing on MENA and MENA, so Middle East and North Africa, and then South Asia. And then when we look at projects, we really try to, so we're a development institution. That means we have to have a very strong development impact for our projects. So then the way we assess that is really looking at some of the cross-cutting issues that are mentioned there: gender, disruptive technology, local capital markets development, and then the scaling up of mobilization. So I don't know what happened with the photo here, but Beatrice already mentioned this, just to say that, you know, I be the liaison officer, I sit in Brussels, but happy to travel to the Baltics as needed. This is looking a bit of our, sorry, go back. At our investment portfolio in Western Europe. So these are 27 countries that we cover from our team, from our department. The portfolio very much mirrors the portfolio of IFC in terms of industry. So you can see the same mix: financial institution groups being the largest, then followed by infrastructure, mass, and disruptive technologies. And then in terms of regions, it's a bit different for us in Western Europe, because the companies want to go mostly to Africa and Europe and Central Asia, as you can see there. But again, we can look at any destination, developing destination. And here I just wanted to give you a flavor of some of the projects that we've done. So we've tried to pick projects that are in different sectors, and also projects that are fairly small in size. I mean, we can go big or we can go small. We can do a whole range of investments, but let's maybe begin by looking at the first one. It's called C-Tree. This is an Israeli AI-powered company that provides a service to identify the health and growth rate of trees. So what this does, it allows producers to really measure, come up with a market strategy for their products, but really measure the volume of, for example, of their crops and how much they expect to receive. So this is a very useful tool, which can have a lot of applications for farmers. So we've tried to provide a 8 million equity investment to help them grow their R&D and also broaden the crops that they cover, not just trees, but other type of crops, and allow them to scale globally. So this is one type of investment that we've done in agribusiness. The second one is an example from health tech. It's a French group called Serba Healthcare. And they have diagnostic laboratories across Africa. And with COVID, when COVID struck, there was not enough capacity to basically conduct all these laboratory tests that were needed. So together with Proparco, which is the private sector arm of IFD, we decided to provide a 7.5 million loan to the company to expand their facilities across a number of African countries. So Gabon, Ghana, Kenya, Mozambique. I'm not going to read all of them, but there's a number of them, and also help them fund purchasing new facilities across Africa. So there's a clear development impact there as well. So we increase the access of people in these countries to reliable diagnostics. So yeah, in response to the COVID-19 crisis. The third example is an equity investment, the 6 million equity investment into a fintech company that provides B2B remittances services. So by using our funding, the company was really able to scale their services and lower the cost, which is something that the cost, and also providing better service quality to its clients across Africa. So this is where we feel we had a good developmental impact. And finally, there's an example from agribusiness again. So this is a company, again, an Israeli company, to which we provided a 4.5 million loan. This is to help them open a new animal feed facility in Nigeria. So Nigeria is a country that relies heavily on cattle and on raising cattle and on selling the meat. So in order to make it affordable for farmers to continue to raise animals, we had to lower the price of the animal feed. So by opening a local facility that produces this type of feed and additives for farmers locally, we've promoted the competitiveness of this market, and also ensuring that there's job creation that comes along. So there's people that are going to be employed in this new factory that's going to be opened. So I hope that's useful. I will maybe get on to the CDF now. So this is one of the youngest departments in IFC, though we have started engaging in this in funds in the early 80s. So it's a department that is focused almost exclusively on equity investments. And we can really accompany throughout the entrepreneurship cycle companies. We have different programs which address different needs in each of the phases of the cycle, as I'll show later on. We're focusing on sectors that are really high growth. So for example, health tech, edu tech, agri tech, all these type of sectors. Logistics is a very important one. So we're really looking at the sectors. As you can see, in terms of some of the companies. We have 55 active investee companies, and 15 of these are unicorns. One of them is Bold. And we're invested in around 60 VC funds, seed funds, and incubators. And then you can see through these investments exactly how many companies, investee companies, that we can reach. So it's really like leveraging the effect to reach 1,600, over 1,600 investee companies. So I put up this slide. I hinted at it. So you can see we have different programs which address different stages of development for companies. So for example, in the space of venture capital, we have a program called Startup Catalyst, for which we invest in incubators and accelerators. Then as the companies grow and move into scale, we invest in VC funds. The same for private equity, sort of mirrors what we do on the venture capital side. We go from SME Ventures, which is a program where we provide financing for onlining to from the private equity manager to online to SMEs to really private equity growth funds. And then finally, we can also do direct investing into tech companies, but this comes in a later stage. I'll try to show here on this slide. So we're looking at direct investments. These are some Series A, but usually Series B and onwards. And in general, what we try to do, I mean, we're never we always go with another strong, either local or international investor, and we target between 5 and 20% of the ownership. So another thing I wanted to mention on this slide, which I think can be of interest to companies here today, it's this program called Tech Emerge. So Tech Emerge is a platform, sort of a matchmaking platform that was done by IFC, and it aims to match a company in a developing part of the world that has a very innovative solution with potential clients and customers in emerging markets. So to give you an example, the most recent call for proposal was for cooling solutions in Latin America and the Caribbean. So companies that had innovative cooling solutions were then matched with potential clients in Latin America. And we feel this can be interesting because it's low risk, and it's a way for companies to experience what it is to go into the emerging markets in a softer version of it. And sometimes we do provide some seed funding for the projects for the pilot projects to take off the ground. And I don't know, again, why my logos are not showing. I had here a nice logo of Bold, but Beatrice already mentioned. So our financing was to help them expand their services in Nigeria, which is a large African market, but also for a thing that is quite innovative, which is female-only cabs. So the drivers are females, and they only take female clients, is to ensure the safety and security of the passengers. Another nice feature is that this allows people really not only, so during the pandemic, not only to transport persons, but also to transport goods and provide services. So this was a very innovative way for Nigeria of doing business. And then finally, so two more points. This is to sort of address and give you an insight of what we're trying to do in response to the conflict in Ukraine. So we have continued to disburse to our clients and provide advisory services. We have continued to, and Beatrice mentioned, to enable access to essential fuel and food products. This was during the more active phase of the war, which is still ongoing. We are also looking at housing solution for the internally displaced population, working with municipalities to be able to do that. After the war, obviously, there will be a lot to do. So we will focus our efforts on rebuilding the infrastructure assets, and modernizing all the industrial facilities and bringing them to European standards. And then with the banks, whatever recapitalization and restructuring is needed. We have a facility in discussions now, so it should receive board approval shortly. This will be to support companies not only in Ukraine, but also in neighboring countries so that were affected by the conflict. So just quickly to wrap up some of the value add that we think IFC provides to companies. So in the first place, we're a long-term and patient investor. So you can see that our loans have a long maturity and we're there to stay. Many times clients who work with us once become repeat clients. So we tend to work with them throughout their different projects. We have an international stamp for approval. So you work with IFC, then it's easier for you to attract other investors in your company as well. And we've heard that yesterday from Bolt that this is one of the things that they liked about partnering with us. We provide equity participation, and also, as mentioned, we can mobilize capital from third parties. The second one, I'm not going to spend too much time because our colleagues in Miga will talk about it, but we rely on being part of the World Bank Group as a whole to offer different types of solutions. And whenever there's an issue, also to rely on the government relations that the bank has to be able to iron out whatever problems. We have a big sector expertise. So we've been created 60 years ago. We've accumulated a wealth of knowledge in different regions of the world. Many times this knowledge is transferable within the corporation. So if there's a new project in a country, we always have someone to ask, how did you do that before? How we can apply it to our own country. So this is an advantage of being part of a global organization. And we have access to international investors. The fourth one, sorry, I would like to point out is the regional knowledge. So I did mention that we have a lot of offices on the ground. So our staff really know the conditions in the country. They know the local partners. They can advise. Many times if there's a European company that is interested in going to a country that they're not so they don't know so well, we put them in touch with the respective country manager. They get a lot of good feedback and incorporate that information into their decision-making process. Then lastly, on the last two, on environmental and social risk management, so we have very high standards, which also have been the basis of some of the industry principles, for example, the Equator Principles, which were modeled after IFC standards. We also offer a wide variety of sustainability toolkits, so we offer advice and on supply chain issues, for example, on corporate governance and the environmental and social standards. So I think I'll leave it at that. You have our contacts on this slide, and if there's any questions, I'm happy to take them. Otherwise, thank you so much for your time. And I'll pass the floor back to Yanis. Yes, go ahead.
Please, just we'll give you a microphone. So
Thank you. So I'm from Swedbank, Trade Finance, and listening to this, it seemed to me that during decades, the focus has somehow moved a bit, because like 10, 15 years ago, it was more like of trade finance through bank. So I mean, this your risk-taking is taking risk of bank, and now it seems that you are more focused on direct companies financing, or it is just feeling of.
So I'm not sure actually about this. I think we continue to do both. There's, I don't know, Beatrice, if you have a view on this.
Well, thank you for your question. Okay, I have to move to the microphone. Thank you for your question. I think it's a little bit of both. I mean, IFC has always been was created at the beginning to attract investments and support the private sector through investments in developing countries. What has changed is that over the years, in the beginning, we supported private sector companies in the regions where we invested, and then we started to attract foreign investors. And now the 3.0 strategy is to even help prepare the project to attract investors. And trade finance, I mean, export promotion has been a product that was developed about 20 years ago, sort of like help the promotion. But in the end, it's really the investment focus. The mostly IFC focuses on investments. So trade finance, it's just a byproduct.
Because we were using trade finance services of your company before, let's say, AML era.
Anti-money laundering.
Yeah. I mean, before it just became issue number one in the world, and now these problems which we are encountering with usage of your services is that. First of all, amounts that this amount kind of this level was so huge that our local companies usually were not qualifying for the first deal, because first deal you want to do for a smaller amount and then only to see how it's going on. Don't you know what are these now, these limits? Because previously it was like, let's talk only from million or like close to million. And then these first deals, which you want just to check how it's working, then they were not going through this. And other issue, if we even these small amounts were considered, then there was issues that we have super crazy strong requirements from central bank and also from our local organization regarding checking of counterparties. In these cases, it turned out that our counterparty is not just you, but we are taking risk of this, let's say, Nigerian issuing bank. And so since this is kind of direct our counterparty, we as a bank, we should do full KYC, and you can imagine these piles of questionnaires which we should fulfill. And I remember that last time when your organization was here in Riga, it was like, as you said,
3 years ago.
Yes. So then I also raised this issue that maybe you or somehow World Bank or something could contact directly our central bank to explain that you have done this already for us, so that if you are taking this Nigerian bank risk, that we can rely on your expertise and so on. But unfortunately, somehow it has maybe COVID took it over. And this is the issue, so that we are not, as per our local regulation, allowed to enter into direct. So if you would be like a bank which is in between confirming the deal, then we have direct relations with this bank which is confirming. But since you are set like aside with the guarantees, and our direct contact is with, let's say, this Nigerian bank, then as per existing law, we cannot rely on your checkings and so on. This is this open issue, which would be good that somehow maybe in cooperation in between our ministry and you as a World Bank.
Okay, well, thank you very much. I mean, it's you're talking about the trade finance program, where IFC provides a guarantee for the importing bank, in this case, the Nigerian bank, so that the Latvian bank issuing the letter of credit, supporting the export financing. Exactly. So the Latvian bank is secured from the credit risk of the Nigerian bank. And what you're saying is that there seems to be an issue that your central bank doesn't really acknowledge that there is like an IFC, an international finance institution, guaranteeing the credit risk. Exactly. So I think this might be something where the Ministry of Finance or the ED's office can help us. We would have to bring in the specialists to see how we can explain this better and how we can provide information to your central bank and explain the structure of the deal. So that might help. Because lots of other countries in Western Europe and the States are actually using this and don't seem to have the same issue. And it's a very good way of securing the trade flow. Yeah.
We are talking about, let's say, 200,000 deals. And then you never know whether after this deal will follow next one. This is first, like taking and then investment in so big KYC.
You're right. Yeah. But the credit check of the Nigerian bank has been done by IFC. So we know the credit risk of the Nigerian bank because we have looked at it. Yeah. Yeah. Okay, so let's look at this issue that you just mentioned. Are there any other questions?
I think we will move to the questions in the Q&A session.
Okay.
We have some already, but I think that we will have this under discussion. And thank you very much for the questions. And thank you, Lucia, for the presentation. I believe that the issue was regarding two different versions of PowerPoint. I believe that the presentation most probably was made on one version and it was displayed on the other. So, but I think that all of the viewers will be able to see the full presentations afterwards. So, okay, we are moving forward with our agenda, and I'm happy to invite here on the stage with the presentation of the overview of the Miga products and services, Mr. Jan Burtin. And Jan is a Senior Investment Guarantee Officer at Miga, and also I guess Daniel Emery will join you shortly. And Daniel is Europe Hub Consultant at Miga. So. This is the correct presentation. I hope that all of the photo slides will be visible at this presentation. If not, also afterwards. So,
thank you. So, thank you. First of all, thank you for the Ministry of Finance, and thank you also for the Latvian Chamber of Commerce and Industry for the invitation. So, it's a good opportunity, as you mentioned, for Miga to present its product. Unlike IFC, the last time we come was probably about like 8 or 9 years ago. So it was overdue to come to Latvia and to present a product. So just maybe very quickly, because it was already presented by Beatrice and by Lucia, it's really where Miga fits within the World Bank Group. So mainly focusing just on the two institutions, as this was described, that provide support to the private sector. So Miga is I would say, the most recent edition of the World Bank Group, 35 years of existence, and with I would say mandate really like to promote foreign direct investment in emerging countries. So unlike the IFC, which is providing debt or equity to support the private sector, Miga is mainly providing guarantees to the private sector. So guarantees to sponsors for equity, shareholder loans, or guarantees to lenders. And basically, we have two products that we are using. The first one is what we call political risk insurance. It's mainly for project finance type of structure. And the second one is credit enhancement, very similar to what ECAs are doing, export credit agencies. So it's for public sector projects when lenders will provide financing to government, municipalities, or state-owned enterprise. But for this presentation, I will mainly focus on political risk insurance, which is the key focus. But happy to have a discussion with banks later on the other product if needed. So like the IFC, we cover the same sectors, a bit different structure, different organization, but it's exactly the same structure, focusing on the same priorities. So either which are the low-income countries, conflict and fragile states, but also climate change. And you can see also in the subsectors, you can see we do a lot right now about renewable energy, distributing generation like mini grids, but also when we look at manufacturing, agribusiness, looking at forestry, green buildings. So climate change is a big focus of the institution right now. And when we see the new projects which are presented by Miga, but by the World Bank or by the IFC, you will find all these priorities incorporated in the new projects. Miga is, even if we are the latest organization and we're quite small, unlike the IFC or the World Bank is more than 10,000 employees. IFC is like 4,000 employees. Miga is like 180 staff. So it's a kind of the SME of the World Bank Group, if you want so. And we're really so focusing on the work, but because we're small, we rely a lot also on the other institutions. So when we prepare a project, when we do business development, when we try to work on due diligence to execute the projects, we rely a lot, I would say, on our sister organization. And so, as you can see, it's like Miga grew quite significantly over the last 10 years. 15 years ago, we were doing about like $1 billion of annual guarantees on an annual basis. Then you see now we're close to 5 billion on an annual basis. So it grew significantly, which shows that products are well used by the private sector. And so last year we had about like 24 billion worth of gross exposure, and we had about like 50 plus new projects approved during the fiscal year. In terms of distribution, it's quite widespread. You see Sub-Saharan Africa, Latin America, Europe, and Central Asia are quite similar size. So we cover quite well all the regions. And in terms of volume per sectors, I would say you will find the large infrastructure sector doing the bulk for exposure. Also, like the IFC, financial and capital markets, is quite significant. MAS, which stands for manufacturing, agribusiness, and services, tend to be smaller in terms of, I would say, volume, but in terms of number of operations. In fact, last year, I would say more than a third of a project were in that sector. It's just because the projects tend to be smaller in terms of size. So we're promoting, as I say, we're promoting cross-border investment. So we'll cover all the private investors in terms of equity, like I say, shareholder loans, the lenders, loans, swap instruments, debt instruments, but also we can cover like O&M contracts and sometimes EPC contracts. Like the AFC, we're mainly targeting investment in emerging countries. So this is about like 155 countries which are eligible as host country right now. We never cover 100% of the investment. So I would say the investor will always have some kind of skin in the game. So that helps to align interests when things get difficult. In terms of size, like the AFC, we can do small and we can do large. So the smallest project we did was below $1 million. It was in West Benghazi. But we can do very large. $1.7 billion was the largest project we did in Oman. But I would say we will look almost the same at small and large projects. But small projects, if we do small project, we try to go for the project which have a very high development impact in the most difficult country. And this is where we would be willing to go with investors. In terms of tenor, usually we're here for the long term. So when investors want to go long term, there's a call for infrastructure projects. Usually investor will sign a concession agreement or power purchase agreement for like 15, 20 years. So Miga is able to go with a private investor, even in difficult countries for this type of tenor. Even in countries like conflict state, like Sierra Leone, Chad, Niger, we will be able to go with the private sector. So the private sector will be okay to cover, meaning to take the commercial risk, but all the other risks which are falling outside, basically Miga will take them on and basically will be able to go with a private investor. The thing about 20 years is quite often investors don't really want to be for 20 years in a developing country. So one of the key clients of Miga, we work with a lot of equity funds, private equity funds, infrastructure funds, which even if they get and invest for 20 years, they have an exit strategy for like year 7. But when they get Miga guarantee, they can use Miga guarantee as an exit strategy. So when at year 7, they want to divest their equity share, they can propose Miga guarantee to the new buyer. So it's quite interesting and quite, I would say also in terms of exit strategy, it's provide a good, I would say, boost for the private sector. However, if we're like for 20 years, when Miga sign, I would say we're with the investor for 20 years. Even if the situation gets difficult, we cannot cancel a policy. Unlike the private sector, if after year 3, they say, in fact, this country is not that difficult, it was mainly a perception. Quite often, political risk is a question of perception. They can cancel the Miga policy at no cost. So it's up to the investor to cancel, but when we're in with the investor, we stay with the investor, even if the situation gets very, very difficult. So that's the full cover in terms of political risk that Miga covers. It's like a menu, so it's a la carte. You can pick and choose the cover, and depending on the cover you take, basically it will have an impact on the cost. Just to give you, because nobody knows, I would say if you haven't used political risk insurance, probably you have no idea of how much does it cost. So on average, on a portfolio, Miga Premium accounts for like 1% of the investment we cover. So if you have a $100 million investment to cover in a country, on average on the portfolio, it's like it would be 1% the cost. So we would cover 90% or 95%, and then you charge 1% per annum. But the range can vary quite significantly between countries. So like I say, if you take one cover, if you take four covers, it will have an impact on the pricing. And if you want, I would say, a cover in a country which is low risk, like Morocco, unlike for example, Nigeria, then you will have significant costs. But you will see we have internal instruments within the World Bank Group that help us to reduce the cost of such guarantee, especially in the most difficult countries. So the four risks the first one is what we call currency inconvertibility and transfer restriction. So it's basically help to address any foreign exchange issue. So it helps the investor to convert the local currency into hard currency and to get it out of the country. So when we cover equity, it's mainly about dividends, or when you sell the company and to get the proceeds out of the country. And when it's on a debt, it's mainly linked to the payment schedule of the loan. Expropriation relates to nationalization or any action of the government, which could, by nature, make you impossible to operate on a financially viable your project. War and civil disturbance, it's really like, I would say the private sector would cover any damage on your assets or any event that would prevent the local company to pay back the loan. And the last one is breach of contract. So breach of contract really relates to, it's really mainly for infrastructure projects and relates to some government's obligation which may be incorporated in contractual documentation. And there, basically what we would cover, it's a default on the arbitral award. Miga is a very different, I would say, political risk insurer, unlike the private market. So the service we provide usually exists also in the private market. It may be different, may not be available mainly in a lot of emerging countries. But one of the key things about Miga is really about the deterrent effect and the mediation services that it can provide to the private sector. So today, Miga did about, in 35 years, about like 1,000 projects, close to 1,000 projects. But out of these 1,000 projects, we paid only 10 claims in the last 35 years. And 8 of the 10 claims were related to war and civil disturbance, where we cannot prevent the claim to happen. But we paid only twice for expropriation. We never had to pay for breach of contract. We never had to pay for transfer restriction and convertibility. And when you think about the projects we do, it's really in the most difficult countries. It shows that we had a lot of what we call issues between investors and government and what we call pre-claims, but we always been able to help investors and government to find a solution in order to make sure that the investment stays in the country, because having the investment staying in the country, this is why we will have the high development impact of the projects. So, and when people and when investors goes to Miga, this is really what they're looking for. This ability to help them to go through difficult time when things happen in the country. I will just give you a few examples of projects, which are mainly small projects, so maybe more relevant also for Latvian companies. And this one is quite interesting. So it's a Swedish company, Swedish manufacturing companies, which has basically invested in Ukraine. First investment outside Sweden and in Ukraine. So same. At that time, there was no conflict, but still the company needed some, I would say, comfort to invest in a foreign country. And so basically we help the company to make their foreign investment outside. And basically even today, even with the ongoing war, we're still there. So it's not because something happened, there is some events that we will consider policy. We're still there with the government. With the government, but also with the investor, and make sure the investment remain I would say, operational. So the good thing about this investment is on the west part of the country, so it's not been affected by the current war. But same, you look at 6.4 million, 10 years tenor. So it's quite small in terms of size. Another one, which is related to a Turkish company investing in Egypt. So Egypt, a lot of investments right now are flowing to Egypt in the infrastructure sector, but also a lot in the manufacturing sector. And so this one was for a packaging unit. The interesting features of this one is we covered some equity, and also we covered the corporate guarantee provided by the investor to the lenders. And one interesting thing you will see is like you had IFC also on that project. So we will have projects with IFC. Usually we like to have projects with IFC because IFC will do most of the due diligence work and we will rely on this work. So for us, being a small institution, it's very valuable. But it's not, most of the project we don't have IFC, so we will do our own due diligence process. We have a very similar due diligence process. But it shows you also is like most of this project was related to the loan, and which it was very like a small equity portion that we covered. But same thing, 26 million at the end of the day, 15 years. And you can see tenor was different from the equity and the loan. So the loan was a 10-year loan. So we provide the guarantee to this financial instrument for 10 years. And we did a separate guarantee for 15 years on the equity. So it can be different. And here in terms of risk, it was all 4 risks that were, no, 3 risks that were covered, not breach of contract. Another project which shows another use of another instrument. So it's a pineapple project in Sierra Leone. So Sierra Leone is a conflict state, very difficult, and we supported the Japanese investor there. The interesting thing, because it's a conflict country, it's an IDA country, so it's a country, honestly, with high risk. But in order to provide, I would say, our coverage in terms of to mitigate the risk, but also to lower the cost of, I would say, our guarantee, we use the IDA private sector window. So IDA private sector window is a tool that the World Bank, it's a financing that the World Bank provided to Miga, but also to IFC, in order to, I would say, reduce the level of risk, but also reduce the cost of our guarantees or the loans, the cost of the loans that we would provide for the private companies in these countries. So it's a very great tool and great instrument that help us to bring the private sector into the most difficult countries. So here, so like I said, we used this World Bank instrument. So it was about like quite large, $40 million investment in Sierra Leone. So significant investment in Sierra Leone. It's quite large for the country. And it was for 10 years. The last one, which I think it's also relevant, it's some renewable solar PV projects in Burkina Faso. Originally, it was, as you can see here, it's 2 projects. In fact, it's 3 projects. There's still one to be signed next week or in the next few weeks. And it was 3 small solar PV projects. As you can see, very small amount, like $5 million, $4.5 million equity, $3.5 million equity. And the next one is like $5 million equity. Same tenor, more or less, happened at the same time. We process them at the same time. So we find a way to simplify the overall due diligence process for Miga and for the client. And we present it only once to a board. So the same, when we have project with IFC, usually we combine the due diligence process, but also to a board, we do just one board document. So we always try to find a way to simplify and make it easier for investors to work with us. But this one is interesting because at the end of the day, there was a coup in Burkina Faso. So the first project, Green Yellow, was signed. So it was board approval before, but it was signed with the client the week before the coup. And so we had to put on hold the other one until we made the assessment whether or not we can work with the Burkina Faso government. But a few months later, when we got the green light, I would say, from the World Bank that we can continue operations with Burkina Faso, we basically provided the cover to the other investors, but at the same terms as we provided before the coup. So we kind of grandfathered the terms, because here we're here really to attract investment. So even if sometimes situations change, we try to keep the same as we committed to the investor to keep the same terms. And I think this is a great thing about Miga, about IFC. We hear during, I would say, post-conflict, where the value is really high is during post-conflict time. And this is where we can add value. And when we think about Ukraine, this is how we should see us. And the same. So on Ukraine, you will see it's very similar to what Lucia presented. Right now, there is two phases. So it's mainly relief phase. We try to use the existing instruments to see how we can help, I would say, investors in Ukraine. And so basically, we just started a trade finance instruments with Miga, which was related to the COVID-19 crisis, but we try to see how we can use it also for Ukraine. The difference between the Miga and IFC is mainly confirming local private banks. We will do it with public banks, for example, in Ukraine. So it's mainly political risk. So it's mainly the counterparts we're going to cover. It's mainly public sector. So it will be or confirming LC with public banks, or it will be a trade loan with a government entity, a ministry or the government. The second thing we're doing right now that we can use with existing instruments is to help. We have a project which is called capital optimization. Is to help European banks to increase volume of activities in Ukraine. With this capital optimization, it's a Basel compliant product. It helps to reduce the risk weighting asset at the holding level. So it saves capital for the banks who want to do business, for example, in Ukraine. So that's a very powerful tool that we usually use in other countries. So in Ukraine, we're using with ProCredit as it is now, and we're looking at other European banks to support them in Ukraine. Of course, the main part of the work will be for the recovery and reconstruction part. And I think here, this is what Lucia, there is some discussion with the board in order to see how we can be ready and help the country to rebuild, we say, key infrastructure, especially in Ukraine, but also bring more private investment in Ukraine. I will not go in the process, and I think I will stop that there, but basically the process is very similar from the IFC. Just in terms, because I don't think we talk about it in terms of timing, because we tend to have a reputation that working with the World Bank Group takes time. It really depends on the project. It can be very quick. It can be quite long. It really depends of the project itself. So when you have all the documentation, the project is ready. We had some solar PV projects like in South Africa, where all the documentation was up ready. It took 3 months from inception to contract signing to get it ready. But sometimes if you work like in a very large infrastructure project, to reach financial closing is going to take time, 12 months, 18 months. And so we're just going to follow the pace, I would say, of the other investors. When the project is ready, the guarantee will be ready. Thank you. Yanis.
Thank you, Jan. Is there some part of the presentation for Daniel as well?
No.
No. Okay, then I guess we are finished by the official part. Okay, thank you very much. Actually, I have a lot of questions from my perspective as well. We are receiving some questions via different channels, and I think that we should start a Q&A session. And I think that I will just get a microphone. I think that colleagues from IFC and Miga will just hand the microphone over to the more competent colleague if necessary. Yeah, a lot of interesting information and also some questions already here from the auditorium. The first question is, I think that the first part of the questions will be more addressed to the IFC colleagues. And one of the most interesting cases is the both, of course, and this is just one practical example. Everybody here in the Latvian business, from Latvian business perspective, can understand and knows the exact company. Could you please comment a bit more on the practical side of the cooperation? So, and namely whether this is an equity investment or whether this is a loan investment, and about the cooperation format. And also we have a specific questions, of course, regarding interest rates. Are the interest rates for your services high? So probably some comment on the both situation. as far as the confidentiality allows, of course.
Okay, so thank you for the question. Do I have to go there?
No, you will be seen from that camera, so
okay.
this is okay.
Right.
We can just
Sorry,
work on this.
yeah. So yeah, in terms of the collaboration, I think this was an interesting case because it came up when the COVID crisis started. So we were supposed to go to have a in-person event, and then we ended up having a discussion online with Bolt, and so the whole process was done online. So this is a very interesting thing, I think, to mention, that we've done the whole due diligence and all the discussions between the lawyers and everything that comes with. We've done everything online. So and it was quite a speedy process in terms of how long it took. So I think in total the person from Bolt was mentioning around 6 months. So that was not too long. And then in terms of the pricing, your question was on pricing, right? I mean, we are pricing at whatever the market is pricing. So in order to ensure that there's no distortion. So I don't know how. I mean, I don't know, Beatrice, if you have anything else that you can add on this, but yeah. And it was, sorry to say, it was a convertible note.
Okay.
Yes.
Yes, in terms of the pricing, as Lucia mentioned, it's definitely market-based. We have to look at the risk and the tenor of the transaction, but it is market-based. So we don't want to crowd out private financing or other actors. So the exact conditions for this specific loan, we don't have present, and I don't think that we would even disclose it. But we are working like a bank on market-based rates.
But what about, this is actually one of the problems for the Latvian national businesses, that actually loan rates from the banks, and I think that colleagues from the banks will probably comment on this one and want to comment on this one as well. The interest rates are rather high comparing to general interest rates in Europe. How do you see, and do you look only on the national perspective from the market, or you look widespread, for example, Baltics, whole of the Europe? And what about this approach?
Well, we look at the market where the investment takes place, not at the market where the company sponsor is based. So we would look if the investment, I mean, if it's investment is in an African country, we would look what would it cost to finance such a project based on the different criteria. What would it cost to finance it in this African country?
Okay, thank you. This gives any more comment?
Yeah.
I'm talking for AFC. No, but I think it's, even if it's commercial rate, is at the end of the day, it's very different. Like any other DFIs, it's like long-term, meaning financing. So the same now, you see 19, 20 years financing provided by IFC in emerging countries. It will be very difficult for any commercial banks to do that. And the same is like IFC also access to IDA PSW, which is blending finance window, so which helps to provide, I would say, affordable rates for companies, especially in these markets.
Okay, thank you. I think that, business persons are really pragmatic, and they're always trying to understand how the deal could be structured as well. So this gives a better understanding on how this works from the technical side on your end. Also, I think you mentioned during the presentations about the trying to raise standards for the companies. So namely, not only investing, but a pre-phase of investing. So let's say, for example, a couple of years before investment, there is this due diligence work. And could you please comment on also some practical experience regarding this? And I think that this could also be really interesting for the Latvian companies. There are a lot of active companies, for example, in the Nasdaq, and I think this is just one of the milestones, for example, where companies boost their, for example, inner due diligence. How could you help companies doing this before the investment?
So I know it's up to, but can you repeat what kind of companies were you referring to?
No, the general idea, as I understood from the presentation, in some cases, IFC before the investment helps companies to actually raise their inner qualities regarding all kinds of due diligence,
Okay.
all kind of procedures, for example. Could you comment on this?
So maybe we have to distinguish two different approaches. The one is like what IFC has been done traditionally, which is called mainstream investments. So you have a sponsor, a company that already has a project wanting to invest in emerging markets, and they want to set up shop. In this case, they already have the project and approach IFC for support, either equity or loan. So IFC would then do a due diligence and would see whether the conditions are met for IFC to go along, and would sort of look at the project and then take a decision as to whether it meets the criteria or not. But what we have seen with the ambitions of the World Bank Group to move into more difficult markets, into fragile contexts, into very poor countries, obviously the conditions are much more difficult for the private sector to invest. So what we have created is this upstream approach, this early engagement approach, where we look at what are the conditions that prevent investments into these very difficult markets. Maybe it's a systemic problem where you have like the regulations or the legal framework is not in place for a specific activity. So IFC could come in and start together with the World Bank, work on this regulatory framework to improve it so you could actually enable an investment in a specific sector. Or you have like a company that has a product, but they need to have a little bit more hand-holding in a specific market. So we would, under certain circumstances, do a feasibility study on the project level and help them to make their project feasible. So this is the upstream approach, where we hope to be able to unlock more investments into these more difficult markets. So I don't know if this answers the question, but it really depends on the project, the nature of the project, the countries that the company wants to go. And the best is always to approach us and come in with a specific project idea, and then we can connect them with our industry specialists or with the country specialists, and we very quickly can see, is it feasible or not, or what needs to be done to make a project feasible.
Just to add to what Beatrice said, so I mentioned briefly in the presentation, there's certain areas where we can work, right? The environmental and social standards. So we have experts in that field who can help with those, providing advice on that. We can help with corporate governance. So there's different areas of focus we can work with the company depending on what the company needs. So I mean, it's very much on a case by case basis. That's why so it's a matter of talking to the company and assessing what that company needs. So that's why Beatrice's point on approaching us early on, so we can work together with the company towards later step of investing abroad.
Okay, yeah, because from a national perspective, I would say that even in some cases, even companies' business is really good and they're working with really nice results from the financial perspective. It's not always connected to the, for example, ESG or social responsibility standards. So it is also an important direction to work with, also in the emerging markets. There is also a question regarding, let's say, nationally typical industries. And so, as you already mentioned in your presentations, the agriculture industry is rather widespread here in Latvia, but not too many agriculture businesses are working with different third country markets. So does these national companies who are probably in most cases working on a national level, are these of your profile, or you're more focused on those companies who would probably want to expand in third country markets?
So
well, yeah, we are definitely looking at companies that want to expand into our emerging markets. In fact, we can only support investments in developing economies and emerging markets. As you know, like maybe 20 years ago, we were still able to support companies in the Baltics, but in the meantime, you have graduated, so we could not support an investment in your countries here in the Baltics. So yeah, it has to be for Latvian companies wanting to go abroad, maybe to Eastern Europe, maybe to Ukraine. Obviously, in this specific case, there are certain constraints at the moment. Countries that want to go to Asia or the Middle East, Africa, Latin America. That would be the focus. So companies wanting to expand abroad.
Okay, thank you. This I believe that this was an important clarification for some of the companies.
Yeah, so just wanted to say our definition of emerging markets is quite broad. So Beatrice said, I mean, we can still work in countries like Poland, depending on the sector. We can work in Romania, Bulgaria. So these are markets that are not really unfamiliar, I guess, to Baltic companies who are already present in the region. So when we say Africa, it's because for us it's an important region, but it can also, we can consider investments in a country like Romania or Bulgaria or Poland.
Okay, thank you. The next question comes for more of a let's say from the finance industry, and this is not in this case not related to the traditional financial institutions like banks, but I would say that the venture capital industry has been developing pretty rapidly here for the past couple of years. And do you see, you mentioned, I guess, that there are some possible cooperation directions for you with the national venture capital companies which are working with the startups who are trying to reach some emerging markets. Could you probably comment on some experience or just some general comment?
So thank you. For the Baltics, I think what we've done is look more in depth into the fintech sector. So because there's a lot of interesting fintech companies that have solutions which could be applicable to emerging markets. So we are having these conversations with some of the Latvian companies. And in terms of the VC space, I think we're looking at we're kind of mapping and seeing what is out there. But if there's I think that there's interest from our teams who are looking at this to engage. So maybe as a next trip or mission, we could look into that.
Just adding to what Lucia said, I mean, and in her presentation, there was one slide that sort of like showed the landscape of venture capital and private equity activities that we have. So we have a dedicated team. Actually, some of the colleagues are sitting in Vienna and in Paris. So we are very interested in identifying new players in this area. So again, if there are companies out there that work in this space, private equity, venture capital, startups, the best is to contact us, and we will quickly put them in contact with our disruptive technology and funds colleagues, because they have the expertise and they very quickly will see whether this is something where we could start a partnership or what needs to be done to sort of make it happen.
Yeah, actually, just a small comment from my perspective. For the past 5 years, I would say that a lot of interesting technology from the startups perspective has been created regarding different kinds of healthcare technology here in Latvia. And this is also, these kinds of technologies are the ones who are scalable globally. So this could probably also give some boost and actually give some disruption to these third country markets. The last question in the to the side of Miga, IFC, I believe so, and then some questions to the colleagues from Miga. You also mentioned that you could probably your actions could probably result in some third-party mobilization, so regarding also financing, and could the cooperation with the IFC, for example, mean that this is actually a possibility of a gateway to all kinds of different other investments? Or was the idea a bit different?
So when we talk about mobilization, I mean, we have like a project sponsor that wants to invest in let's say in one of those emerging markets. IFC would co-invest, but then also we try to find additional financiers. Let's say we have a very big infrastructure project where obviously IFC has limitations. So we would sort of look at bringing in funding from international banks, for example. We would do a syndication, trying to find other financiers. We have also products where we like to sell it to asset managers who have funds and want to invest in developing countries to diversify their portfolios. So we have different asset managers from Western Europe investing in some of our platforms. So this is when we talk about mobilization, is this additional funding that we are going to find in the market depending on the project. So it's not really just the sponsor, the company that is investing and also putting in money, and IFC putting in money, it's additional funders. For example, yes, European banks could be syndication partners. I don't know the Latvian banking sector well enough to know whether this would be something for the Latvian banking sector. It's maybe too small, I don't know. But yeah, thanks.
I think in some cases it could be a possibility, but this is, of course, it really depends on the specific project, I guess. Dear viewers, I just wanted to remind you that you have a possibility to ask your interesting questions in the chat window in the Zoom conference tool. So please do that. We have a couple of questions already here on the table, but when we finish, then the question opportunity will be closed. So as told before, a couple of questions to Miga regarding one of the most important and directions of the export businesses here in Latvia is of course related to the Ukraine. And we see that a lot of Latvian companies are actually already saying that they will most probably work with the rebuilding, let's say rebuilding component of the what you mentioned. And how would you already responded to the question which was given to us a bit in your slides, but could you please probably comment a bit more about you taking an action in the market where warfare is still ongoing, and how does this affect? And and one of the practical questions was whether this isn't really expensive, because with the ongoing warfare, the risks are really high for the business to fail, actually.
Yeah, you're right. The risk is high, and in fact, when we price or guarantees, it's related to the risk. So on a quarterly basis, each risk you've seen is reassessed. But the way yes, we will provide some support during war, as we say, trade finance, capital optimization products for banks. This is what projects are in preparation right now. But when you say that, yeah, it's going to be expensive, what we try to do, and I think it's part of the discussion also we have with the board, is to get also access to some trust fund for the reconstruction, which will help to somehow subsidize the risk premium associated to our guarantees. And I think it will be the same for IFC. They will use similar type of instruments to reduce the cost of financing in order to help the reconstruction in Ukraine.
Okay, and you named a lot of markets which are probably not in the scope of the Latvian companies. So the question is as follows: do you have any red lines regarding markets you are not working with in total? So because you named some of these markets which are actually looked with some cautious regarding also the AML challenges, for example, we touched upon a bit more earlier.
No, I say like Lucia mentioned, is like we open in Eastern European markets. If you look at closer markets which are more relevant, we open in Eastern European markets. We do less activities because I would say Miga before was not needed there. But now we have a request for Poland. We have a request from Romania, Bulgaria that we didn't see before. So as you can see, demand can vary based on the perception of the investors on risk. And of course, Central Asia is a big region which is booming right now in terms of investment. But I mentioned also some African countries, Dutch to highlight that we can work in very difficult countries and post-conflict countries. And post, or you can say during conflict countries. And I think this is part of really the mandate of the World Bank Group. It's really like to assist this country and help these countries with the World Bank through the World Bank lending on the public sector, but also Miga and IFC on the private side. In terms of countries, usually where we do not work, it's mainly related to, I would say, countries where, for example, they are in arrears with the World Bank. Usually we are close, IFC and Miga is close, but all the other countries we would be open. But like we say, we have what we call part 1 and part 2 countries. And so we open in 155 countries. And I think it's more or less the same one as IFC. So countries may graduate. And when they graduate, it means we cannot provide guarantee in this country. So we cannot provide guarantee in Latvia. Latvia just graduated not such a long time ago, but we can support Latvian companies investing, I would say, east or in other emerging countries. And it's very interesting because some emerging countries we're working a lot. For example, Mexico, Chile, which are, I would say, middle-income countries, but we're still open for us to support them.
Okay, thank you. The last question is whatever. So the question is also really practical from Latvian businesses, and as from my understanding from the question itself, the Miga is giving guarantees as a financial instrument. And do you also give some ideas to the companies on how you work with the company on the practical side regarding the risk profile of the specific states? So, and the idea is whether you're just only about to, for example, give a guarantee as a financial instrument to the company, or you also advise the company possible risks, or so maybe they can adopt their business perspective.
We have a lot of dialogue with companies in general. Doesn't mean we're going to support them, and we're open to have this open dialogue with companies. So, like when we say the energy sector, we have a good understanding, for example, of energy sectors in any emerging countries because we have operation in most of these countries. So happy to share with investor or perception or what's happening in the country. And if we don't have, I would say, the knowledge, quite often what we do is we will liaise these people with the sector specialist of the World Bank. So we could be a partner. You could use our instruments, Miga, IFC, but I think we always glad to connect, I would say, investors to relevant parties of the World Bank or IFC institution working in these emerging countries, so they can have a dialogue and can exchange. And it could be very valuable for Latvian investors. Yes, definitely.
This was on the table. So probably some questions. Not too many people here on the hall. No, okay. So I guess that we are finished with the question session, and since we have in our agenda we have a small coffee break at this point, and I think we will move on forward to the individual bilateral meetings. These will happen online after the coffee break. So. Thank you very much for the Latvian businesses who joined today. I believe that this will be watched for the following days and months as well. The experience shows that the follow-up work with different kind of online recordings is really important at this point. Thank you very much to the colleagues from the IFC and Miga, and also to the colleagues from the Ministry of Finance. I think that this was really not only interesting, but also an important event for the Latvian businesses. And I think that this is only just the next step for Latvian businesses to scale their work on the different kind of markets all across the globe. Thank you very much, and I believe that, and I say with a deep hope by myself, that we will meet on the next events happening with a similar view on accessible finance to the Latvian businesses. And if you have any questions, as said before, you can directly send them to the Latvian Chamber, or of course, connect with the colleagues from the IFC or Miga directly. Thank you very much, and this is it for the official part today. Thank you.